Thank you very much for the invitation. Apologies for addressing you in English. That's the only option I can think of. But thanks very much for the invitation. It's a pleasure and honor to be with you today and address you on some of the most relevant topics from our perspective in Insurance Europe. There are in fact three parts in my presentation that I would like to cover. I would like to say a few words about the context we are in, and to some extent there will be a bit of overlap with what Professor Selimovic just told us in her excellent presentation, but I will try to just more complement what she said on some aspects. I would like to touch on some of the challenges that are most relevant for the insurance sector and finish with a focus on what we are currently looking into a lot in Insurance Europe, which is the concept of protection gaps and how to close them. That's really what I would like to cover today. Just a few words about who we are. Insurance Europe, for those of you who don't know, is the representative, the voice of the insurance and reinsurance sector at European level primarily. So it's the Federation of National Associations. We have members in 26 EU member states and in 6 non-EU member states. So that's the 3 EA country: Iceland, Norway, and Liechtenstein, and then Switzerland, Turkey, and the UK. And we have 5 associate members, which of course includes Bosnia and Herzegovina, and recently Ukraine joined as an associate members. As I said, I would like to start by taking a step back and look at the context that is relevant for the insurance sector. And my view is that there has been an impression that in the last 15 years we have moved from one crisis to the next. We had the financial crisis in 2008, 2007, 2008. Then we had the euro crisis in Europe, which had a big impact. We then had the pandemic, of course, then the war in Ukraine. There is really this feeling of going from one to the next. But now there is another impression, which is that we are living in a situation of permanent crisis, with a number of crises that are affecting our societies, our economies, the people, and that are influencing each other. And that's why last year the concept of perma-crisis or polycrisis became very popular in publications like the Financial Times and The Economist. And I think they reflect quite well this reality. And I would like to briefly touch on some of the aspects of this polycrisis and why they are relevant from an insurance perspective. And I would like to start by what is for me the most relevant one right now. It's climate change. We have every day in the last 3 months we have broken record after record of temperatures on land, on water. Professor Selimovic referred to melting glaciers and the Antarctica. So this is really becoming now a reality, and climate scientists are even trying to understand why there has been such a high increase in temperature in the last couple of months. And the news is that this continues. I saw that there will be an unprecedented heat wave in Brazil and Paraguay in the coming days. So this is really, unfortunately, continuing. This has a huge impact for the direct impact for the sector in terms of increase in natural catastrophes. But I think we also need to think about the indirect impact, such as food production. I read yesterday that olive oil production in Spain is going to go down by 50% this year compared to what is normal. And of course, that's going to have a huge impact on the price of olive oil, as just one anecdotal evidence, but clearly food production is being impacted. I saw that in Sarajevo today there is an agri-tech summit when I was going to the center yesterday. So there may be a need indeed to look at what solutions can be found to make agriculture and food production more resilient, and also therefore for insurance sector to be able to play a role in terms of agriculture insurance, which is an important business line in some markets. Climate change also has an impact on energy production. We see that when there is heat waves, there is less hydroelectric production, there is less nuclear electricity being produced. So just to show, and of course that has an impact on energy prices and therefore inflation. So that shows already the link between climate change and inflation. And inflation obviously is key for the sector. It can lead to a move away from the low interest rate environment, which is good news for the life insurance sector. But as we heard from previous speakers, inflation reflects in increase in claims. That is the case in Bosnia, but that's the case all over Europe, especially in the motor area. That is really currently a big concern due to supply chain issues, but also energy prices, etc. Besides climate change, I would also like to refer to the environment more broadly and biodiversity, which is becoming an area of focus for insurance companies as well. We see that some insurance companies are starting to develop their own guidelines on how to tackle and how to have a positive contribution on biodiversity. The Association of British Insurers, ABI in the UK, has published a very interesting set of guidelines for insurance companies on how to have a positive contribution on biodiversity. The reality is that the figures are quite striking. Also, yesterday a study was published showing that over the last 500 years, 73 genera became extinct out of the 5,400 vertebrate genera that they examine. So it's quite striking, and somehow it's both having an impact or will have an impact on the insurance sector, but also there will be increasing pressure probably on the insurance sector to do more to have a positive contribution. I will move on. There is, as that was covered already, increased fragmentation and geopolitical place. The changes, tensions, let's say, that has been covered already between the US and China and Europe having to find its place, and obviously now the war in Ukraine. Demographics, I think, is a key factor to keep in mind. You know, of course, that's in Bosnia and Herzegovina, but that's a reality for the whole of the Western world, let's say, and especially also South and East Europe. Shrinking population, shrinking age population, which raises question in terms of who is going to work to pay the pension, who is going to also pay for the cost of healthcare. So that's clearly one of the big mega trends that we need to look into. And then there is, of course, digitalization, which has not yet really been covered. So digitalization is clearly one of the big trends that has allowed us, I think, to go through the pandemic reasonably well, because we have been able to work from home and to interact with clients in a remote way. So there are many advantages. AI is probably going to be a game changer also for the insurance sector in the future. And at the same time, digitalization does not go without challenges. There is, of course, the risks to data being stolen. There is cyber risks, but there is also links with other of the topics I mentioned. There are consequences in terms of water use, energy use, and also in terms of the need for raw material. I saw, for instance, big demonstrations in Uruguay in terms of tensions between a data center and the need to have access to water. So that's just, again, to show that there are so many links between the different crises that we are going through. I will stop here in terms of this brief overview. What it means concretely is that because we are a sector that is so connected with the real economy, let's say, there are consequences for a sector. Our sector is being affected. There are also opportunities. There is clearly a need for protection, I would say, because these different, let's say, crises or aspects of a general situation mean uncertainty, and therefore a need for protection, which insurance companies should work on. And as I said, I will talk about protection gaps in the third part of my presentation. But now we would like to look into some of the challenges facing the insurance sector, and I would like to start with what is keeping us most busy in Insurance Europe, if you agree, and that's the regulatory challenges. So what are the issues in terms of regulation that insurance companies throughout Europe are facing? And I will just this picture to support what I'm going to say, but I would say the summary is that we feel that insurance companies are faced with an increasingly complex, technical and interconnected set of rules. We have the traditional rules that apply to the insurance sector, such as the rules applicable to the motor insurance sector, the rules on distribution. But on top of it, we now have rules on sustainable finance. We have all sorts of rules affecting on digitalization, affecting many aspects of the business, and therefore we really have this increased complexity. And certainly when we look at rules being developed at European level, there is a concern sometimes that rules are being pushed through too quickly, and that results in rules being not necessarily fit for purpose for our sector. There is also the concern that sometimes our sector is not being kept in mind. So our role in Insurance Europe is certainly to make sure that the people in the European Commission who are proposing rules do know that there is also an insurance perspective that needs to be taken into account. As you know, as a sector, we are in favor of regulation. Good regulation enables insurance companies to meet the need of their customers, deliver cost-effective insurance solutions. Good regulation allows to maintain customer trust and confidence, to preserve a level playing field, and to allow for cross-border business. So that there shouldn't be no question about that. But we need to be careful that we have good regulation and not just regulation for the sake of it. And so as I said, what we really push when we are in our discussions with the European Commission, for instance, is that there is a strong recognition of the realities of insurance, that rules are tailored to the specifics of insurance products, and also that rules are fit for the digital world and the fast evolving consumer demands. I would like now to touch on two concrete areas that are keeping us busy, and I know that Solvency II is not yet a reality in Bosnia and Herzegovina, but we have heard from a previous speaker that this is being looked into. I just wanted to say a few words about where we are in the discussion. Currently, there is a review of the Solvency II framework taking place at European level. In Insurance Europe, we are supportive of Solvency II. We believe that it has really led to an improvement in the solvency of companies throughout Europe. So that should be very clear. But it's also important that the framework allows companies to operate and provide their services to the economy. We heard the Prime Minister referring to the fact that insurers have a role to play in investing in infrastructure, in insuring infrastructure, for instance, but that is only possible if we have the right prudential framework in place. And we believe that to an extent, this is not the case, and that is why the review is so important, and it's an opportunity to correct some of the weaknesses of the current Solvency II framework. So that this is really pretty much what we are pushing. The important thing is to fully recognize the role that insurers have to play as long-term investors, and their business model has to be recognized. When there is a long-term risk, it has to be treated as such. So we need to have the right calibrations to enable insurers to continue to offer long-term guaranteed products. So that's more on the life side, that it should not be disincentive. Otherwise, obviously, all the risk is going on the side of policyholders. And we know from a survey that we conduct on a regular basis that there is interest by policyholders to be offered products with guarantees, but that is then something that we should be, as companies, able to offer with the right framework. And finally, it's key for Solvency II to be proportionate and consistent with other sorts of regulation. And as you may know, proportionality is a key concept in the context of European regulation. It's really to make sure that that more complex piece of regulation can also be applied by smaller and less sophisticated players. So that's really our key asks. I would say the review is being finalized. It may happen still in the coming months. We will see, but that's really something which is a priority for us in Insurance Europe. The other big topic I would like to refer to is the current discussion on a retail investment strategy, and I think that is touching on points which will be discussed in the next panel after the coffee break. So this came a bit as a surprise to an extent. The European Commission came with this retail investment strategy, initially being willing to ban any form of, so to introduce a ban on commissions when distributing products. And in the meantime, things have changed a little bit, but nevertheless, in the proposal that the Commission made, there is a ban on commissions for 3 categories of sales: execution-only sales, non-advised sales, and independent advice. And there are also new excessive requirements for payment of commissions under additional best interest under an additional best interest test for advised sales. So the concern that the sector has, and which we are repeatedly relaying to the European institutions, is that it would potentially, with this proposal, be impossible to buy for policyholders to buy insurance products, so-called EBIPs in the EU legislation in practice. So that could result in an advice gap, and that could in turn result in an insurance and pension gap. So people, and especially the less wealthy people, not being in a position to buy insurance and pension products. And there is also the concern that instead of relying on insurance companies or brokers for their decisions in terms of buying insurance products, people could then rely on social media influencers, which would probably not be a positive outcome. So that's really something that is a key priority for us for the time being, as there is a lot of concern. We are not necessarily saying that a ban on commission is always bad. There are certain markets where it exists and it works, but on the basis of how the market is organized. But what we absolutely want to avoid is a ban on commission imposed at EU level without taking account of the national specificity. So that's the key ask. The other aspect of this strategy is the possibility to have distribution of products digitally by default. So currently in the proposal, there is clearly an interest in going that direction, but there are too many provisions that would still impose to produce and to paper versions of the insurance products, and that's something that we also want to improve during the discussions that are going to take place now in the Parliament and with the Council. So in summary, what we want through this strategy is really no barrier to the digital distribution of products, to be sure that we improve the situation in terms of information overload. Currently with EU legislation, there is much too much information that has to be provided. And finally, that there is no EU-wide ban on commission. That's really the 3 key priorities. And then I would like, as a last example of regulatory developments that we are involved in, touch on something which is a bit more of a future-oriented discussion, but nevertheless I think is going to be important for the sector. It's the question of whether and in which conditions insurance companies can have access to the data that is increasingly being generated by cars. So that is already a reality. More and more data is being generated, although there are big differences between car manufacturers and types of cars, but that is clearly the trend. And of course, from an insurance point of view, that's important because it allows to sell new types of products, so-called pay how you drive, pay as you drive, which should enable to improve safety, reduce claims, and in the current high inflation period, that's quite important. But it should also help achieve the sustainability objective by incentivizing people to drive better or to drive less. So it's clearly a priority. But the question then is how to make sure that insurers can have access to the data being generated in good conditions. And within the Federation, we have already 8 or 9 years ago come to the clear conclusion that without a dedicated piece of legislation, we won't manage that. So that's why we have been, and we are pushing the European Commission to publish a dedicated piece of legislation on access to car data that would then define, in general terms, the conditions under which drivers can decide to share their data with their insurer. And we are in coalition with all sorts of stakeholders, including FIA, so the Fédération Internationale de l'Automobile, who are representing drivers, apart from organizing the Formula One Grand Prix, as you probably know, and who agree completely on this objective. So it's a bit of a big battle between all sorts of stakeholders involved in the automotive sector, and on the other hand, one has to say the car manufacturers who are not willing to be regulated. They are developing models to share their data, but they don't want this to be affected by EU regulation. That's in summary. But that's to give you an example of an area where we believe that it's fundamental to have EU regulation, and that for the sector. Now, I would like to, so that was more for the regulatory aspects. In terms of challenges, there are also increasingly challenges on whether insurers can play their role. So that is something we have observed for the last 2-3 years. We are being approached by other sectors asking us whether we as insurers are doing enough to play a role of insuring risks. So one example is cyber. The Association of Risk Managers in Brussels keep knocking at our door to say our companies, let's say the risk managers of companies, want to have insurers as part of the solution to cover or to deal with their exposure to cyber risks. However, they are not very happy with the offer they receive. Either it's too expensive or it doesn't meet their needs. So can you do better? Can you insure cyber risk, as an example? And I will say something on that protection gap later. Then, of course, there is natural catastrophes in light of all the floods that have taken place this year in many countries, also in this region. Then the question is, can we cover natural catastrophes in a good way? And also now we are being approached by people who are linked to the new digital transformation. So you have the association of recyclers and people who are disposing batteries, who say the premiums are too high, we cannot find insurance, and because it's mandatory, we cannot operate. Or you also have now people who are trying to have a more electric mobility, so pushing towards electric mobility, who are asking whether insurance will be available, for instance, for parking slots for electric vehicles. So all sorts of new questions are being raised on whether we are able to play a role of insuring and whether we will be able to do so in the future. Another such example is the discussion around the right to be forgotten, which I think was discussed in this conference also last year, which is a new trend. So it's a discussion that's taking place both at the level of the European Union and in a number of countries like Belgium, France, Spain, etc. Quite a long list, in fact. Also in Romania recently. So it's the possibility or whether there needs to be a right to be forgotten, which applies mainly to cancer survivors who would then be allowed not for their track record as cancer survivors not to be taken into account in the calculation of a premium, and how this can be organized. So that's a discussion that's taking place, which we are involved in because we believe it's key to be proactive and try to find solutions. The concern being, of course, that this would not be limited to one disease, but to all sorts of diseases, and would then oblige insurance companies to move away from the very principle of risk-based underwriting. And that would, of course, question the very existence of the insurance sector based on the principle of risk-based underwriting. So that's something that is currently keeping us also very busy. I want to briefly mention this because I think it's very important. It's the competitive landscape. Whether insurers will be able to continue to operate on their own in their corner, or whether in the future there will be new players trying to enter the markets. If you would have asked me 10 years ago, I would have said probably I would refer to asset managers as the big competitors. 3 years ago, it would have probably been insurtech companies trying to take some part of the business. But nowadays, the concern, I think, is more big tech, so the Google, Facebook, and Amazon of this world, and whether they will in the future enter the insurance sphere. And that is currently a concern, also due to some of the regulatory developments taking place in Europe. Without entering into too much detail, let me just say that there is two new pieces of legislation called the Digital Markets Act and the Digital Services Act that are meant to regulate the big tech companies and make sure that they cannot abuse their dominant position. That's one. However, there is also now a proposal by the European Commission called FIDA, which stands for Financial Information Data Access. So if you like, it's a proposal on open insurance that is trying to replicate the model of the Payment Services Directive, which wanted to open up the payment business to non-banks. And that would then allow non-insurance companies to get access to the data of insurance companies. And that would include big tech companies. So, of course, there is a huge concern in the sector that given the amount of data they already have, if on top of that they would have access to the data that insurance companies have, they would most likely be in a very comfortable competition position to offer products competing with insurance products and services. And the concern is also that through the existing text that I mentioned, the Digital Markets Act and the Digital Services Act, actually those texts do not allow insurance companies to have access to the data of those companies. So it really feels as if it's completely unfair. Through the FIDA, they could have access to the data of insurance companies, but not the other way around. So that's really a discussion that is taking place now, and that I think could well shape the future of the competition landscape, and therefore we should really be very, very careful about what is happening there. Of course, the big tech companies are also big providers of solutions. For instance, more and more companies are fully reliant on clouds for their data. And so whenever there is a discussion that would make it more complicated for these companies to operate their cloud services, that's also a concern for the sector. So we have a bit of a mixed relationship with those companies. They are, of course, very important providers, but they could become very serious competitors in the future. That's really the view. And I wanted to also touch on, finally, a point that was mentioned briefly before as well, the question of human resources. I think we are currently in a phase all over Europe where there is a fight between many sectors to attract the best talents. And that's also, and the insurance companies are part of that fight. So there is a need to really think in terms of how to attract and keep the best talents, for instance, in the cyber area, but not only. And that's something that I wanted to mention. And then finally, as I said, I would like to touch on protection gaps. So, as I said, there is this perception that increasingly things become complicated, and maybe besides the motor area, which remains quite traditional and unaffected by certain developments, but outside the very traditional areas, it seems that it's increasingly complicated for companies to offer the right cover, and that more and more people are at risk of not being covered. So therefore, within the Global Federation of Insurance Associations, which groups Insurance Europe and associations throughout the world, we worked on a survey on protection gaps covering 4 main areas. I have listed 3 here. Well, they will come: pensions, natural catastrophes, cyber, and health. These are considered the big areas where there is globally a lot of people who are not protected. And then the question was what to do about it. So the report was published in March. If you are interested, it's available on the website of the GFIA, the Global Federation. You have the full report or executive summaries if you don't have the time to read the whole thing. But I think it gives quite a bit of food for thought, so I would recommend it. So on pensions, the gap is considered significant. I think the figure that we calculated is around globally $1 trillion on a yearly basis of lack of saving. I mean, I think it's a bit of a theoretical figure, but that just gives an idea of the sort of amount we are referring to. And we have in the report, as I said, explored possible solutions for that. That's also something we worked on in Insurance Europe. We published a report a couple of years ago, a blueprint for pensions, also available on the website, where we had 3 key objectives: helping people to save more, helping people to save well, and helping people to save wisely. And we explored various ways to get there. For instance, raising awareness about the need for pensions, raising awareness about the pension that people will get when they retire. We talked about auto-enrollment as a possible solution to facilitate the take-up of pension, having the right tax incentives, digital distribution, etc. I will not get into there. I would just mention that on every 2 years in Insurance Europe, we conduct a survey across Europe to try to understand the preferences of people on pensions and the result of that survey, and to see how this evolves over years. So, for instance, we have seen that there is increasingly an interest in receiving the information on a digital basis. There is also an increasing interest in knowing whether sustainability objectives are being considered when investing. So these are interesting trends. This survey is currently being finalized for this year. We will present it during a seminar in November. At the end of November, the information can be found on the website of Insurance Europe, and we will have a discussion to try to understand the result of the survey and also look at differences between countries. There are countries which are extremely digital friendly, like Denmark, and there is the opposite side. Germany is on the opposite camp of not being very keen to be digital friendly. So just as a remark. The second one is cyber. As I already mentioned, currently the penetration of insurance in this area is very small. There are very few markets where you have cyber insurance being offered widely. I think in Europe it's mainly the UK. The rest is very low. But as I said, there is increasing demand by more sophisticated customers, but we could imagine SMEs being also interested later on. And so we try to see what we could be done differently in order to grow that cyber insurance market. And the solutions that that are usually followed, at least at national level, are to raise awareness about cyber risks, so to try to decrease the risks, basically, that people are protecting themselves better, are more resilient. That's clearly one of the objectives. One other objective is to increase the access of insurance companies to data that would help them model cyber risks. What we see as well is that the companies that are venturing into the market of cyber insurance, they tend not to limit themselves to paying claims, but they go more in the direction of providing services, for instance, helping their clients to recover after a successful cyber attack. And that's probably the path that is going to be followed going forward. And then finally, NatCat. Obviously, after, as I said, this summer, there are a lot of questions being raised about whether this is a risk that can be covered by the insurance sector, and in which conditions. Can it be done by the insurance companies alone, or do you need a public-private partnership scheme as you have it in a number of countries? You know, in Spain, NatCat cover is automatically included in the fire insurance of the house. The same is true in France, and that of course means that a lot of people are being covered. But it's also a system that is being questioned because there is an increase in claims. So the sustainability of the systems are being questioned, and in France the system is being reviewed to make sure that what the money available in the pot is sufficient to pay out the claims. And in France we have seen that in recent years the amount has always been higher than the money being collected. So there is no silver bullet, especially with climate change becoming now a reality. But it's I think something that the sector should look into, as there will be more and more calls to the sector to do more, and there is also the possibility for the sector to play its role. And I think I will conclude my presentation here by really summarizing that we are probably entering into a new phase in many respects, which is providing opportunities for the sector, but also a lot of challenges which have to be reflected upon. We try to contribute to that through our discussions in Insurance Europe, and we will try to continue to do that, and focusing on regulatory developments, but also on those discussions more broadly. So I would like to thank you very much for your attention, and I will leave here. Thank you.